Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, September the 10th. The year's 2021. Let's talk trading. Time for the weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. So let's go ahead and take a look at the week. Looks like we're right where we started at the weekly open. All gaps filled this week. And as you can see, we hit the weekly pivot and the previous week's midpoint. We actually broke below the previous week's low. We failed to break above the previous week's high. Looking at the opening range for the day, week, and month and year chart, actually for the week, month, and year, opening range for the day is usually the first 15-minute, first hour, first 4-hour candle, depending on how you like it. Okay. The opening range for the week, we broke out of the high today, and we've pulled back inside that weekly opening range. But during the week, we actually broke into the opening range for the month, broke out of it, and then came back in and broke out the other end. These horizontal line trades are simple, and they are there for the taking. For the year, we're 212 pips above the yearly open, and as you can see, we have missed today's pivot. The opening, the inside bar from 4 days ago, you see we broke above that again. So these lines that get plotted on the chart, you can take advantage of these lines just by trading in the direction of the candle color or the line cross. It's not that difficult. But for today, we only have two pairs over 100 pips in range, and you can see the pounds clocking hit in at 58 pips. That's pretty anemic, an anemic day. You see we're flirting with the weekly open. We're now a couple pips below it. And you can also see that we're above the daily open and between the weekly open. To me, this is kind of like no man's land because you just don't have a good idea what price is doing in this area. And it's really hard to have a bias when you're below the weekly open and above the daily open. So careful trading when price is between those two levels. Looks like we're returning to the rat zone. You can see where the smart rat zone is in comparison to the rat point or rat 1.0, the original rat. We missed the pivot. It was a bullish day. Near the pivot, said take long. We never really got near the pivot, but we didn't even get to the central pivot zone, this area, but it was definitely a bullish day so far. We missed the pivot on the daily. We hit the pivot on the weekly, and we have hit the pivot on the monthly. And there was one other thing I wanted to mention. The 4-hour pivot. There are many times I really like to use the 4-hour pivot as a bias which way I want to trade towards, because we do have some missed pivots here on the 4-hour, but for the most part they usually get taken out. You can see right here we have a missed pivot, and there's a bunch more below and a few above. But for the most part, when I'm doing day trading, intraday trading, it just seems to be almost like a magnet. And so, for example, in the previous 4 hour, you could see price went up, tried to make a new high. I think it may even made a new high for the day and came back down and took out that pivot. Still waiting for this pivot to be taken out. The upper wick zone from yesterday, we see a lot of action in and out on the bottom of this upper wick zone, and ditto for the top. And the ranges for the week, we're just 1 pip above last week's range at the moment. You can see we missed the high breakout by 3 pips. We broke out the low by 5. High minus the close right now is at 36. Close minus low is 126. So what that means when you're looking at the rat zone, if you see that it's the also the rat zone on the week or month candle, let's see. So right now we're in the weekly upper rat zone. If actually this rat zone is the weekly upper rat zone. So if we were in that weekly upper rat zone, you would definitely want to think short. And if you did, you can see you were paid off. You got paid off. So looking at the chart, it's pretty much a doji week. And it looks like we actually, for the last 12 weeks, we're below the average range here. Yesterday, I talked about trading myths. And I know it's really hard for some traders to believe and accept that you can make money just trading at horizontal lines. And part of that reason is because of what you've been told, what you see, what you're bombarded with in your emails and on trading forums every day. People have these systems that are so complex and have so many things going on at the same time. It's almost impossible for the trader to trade, especially trade profitably. But if you just set your lines every 25 pips apart, looking at the double O here, the double O there, and this is looking at a 1-minute chart, you can see the action. So we broke above the 50 here, we broke above it here, here, and yes, in this particular cases, you're making 2-3 pips. But if you do that 10 or more times a day, you might be making 10, 20, 30 pips a day. A relatively short period of time. But let's just say we look at the hour chart and you just stick with it. You can see here, there was a 25 pip move to the up, 25 pip move to the down. And here's yesterday's high. Another good place to just trade with the candle color. We broke above it here. And we broke back into the candle, into the range of the previous day's candle here. So it's really not that difficult, but you just have to get away from the myths and just flush those things out of your brain. You just have to let go of that. because as I've mentioned many times, once you put the trade on, everything you did before, all the analysis, all of that just goes out the window because now you're in a live trade. Price is moving. It's either moving in your direction or it's moving against you. So once you're in the trade, the only thing that's left to do now is manage the money and manage the risk. Make sure you don't lose any more than you're willing to lose on any one particular trade. And when the market smiles upon you, gives you an opportunity to take profit, you take the profit. I mean, this hour is a great example. Had you gone long 50 and you didn't take profit, hit high of 58.9, if you didn't take 5 or more pips of profit, that's on you. I mean, once it, let's see, let me switch over. Let me switch to M5 because that's usually where I like to take my signals using the M5 candle color. So here, got a signal to go long. Maybe stayed in that trade. Maybe got 2 pips, pip or 1 pip. And then once price crossed below the 50 and then crossed above, you have the option. And in this case, I would have been with the H1 candle color. So trading with the candle color, another 1 or 2 pip trade here. This trade, you could have stayed in it, maybe made 5 or more pips. But as you see, it broke out of the high, previous hour's high, dropped back in. Right there is an indication. Take your money off the table. Because what you would want to see is this candle push up here. But it made a new high and started dropping back down. Just take the money off the table. Of course, price could have turned around and rocketed to the moon and you left 50 pips on the table. But that's okay. I left at least 50 pips on the table today because I was taking 1 and 2 pip trades in and out quick. But for some people, that's not their style, and I totally understand it. They're at work, they want to put a trade on in the morning or the night before and then just see what happens, which is a great way to trade. You put your trade on, you set your TP, you set your stop loss, and let the market play it out. See, I kind of have a problem leaving the TP alone. I put it on there and then it gets near it. I get anxious. I take the money off the table. And then sometimes I see price go and hit the TP. Other times I see it reverse and I'm glad that I did it. So it's one of those things where trading is the aggregate of all your trades, not just any one particular trade. So I'd rather have 10 2-pip wins than say 5 2-pip wins and a 10-pip loss because I didn't take a 2-pip win. Because then that 10-pip loss would have wiped out the 5 2-pip wins. And then I'm only making money for the broker rather than for myself. Not that I have anything against the broker, but I'd rather make money for myself than for the broker. They're going to get theirs anyway. And back to our simple trading screen here with the higher low, lower high. It's set to daily. Normally, we like to trade this on the M5 time frame. And you can see here, there was pips to be made taking that last trade to the north, and there was, but I can't tell because these are dynamic, these moves. So this happened 13 bars ago, so probably this one had a different level. I should probably put the mid dots on this chart so you can see what the levels were. Okay, fellow traders, that wraps it up for the week. I hope you had a profitable week of trading. You have a real fun and safe weekend. And remember to click the bell. Like this video. This is the Rumpled One, over and out.